Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching. This Simply Stocks, and in this video today, I'm going to discuss about a transportation logistics company that is making new highs for the past few months and has been doing extremely well. So let's understand about this business and let's get started. So first of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I am not a member of NSE and BSA, and that I am not an official portfolio advisor. These all are my personal opinion. This is for educational purposes so that you understand about different businesses, and I can put in my analysis and whatever knowledge I have gained being a retail investor for the last 12 13 years. I'm putting that on board here to help you out. So any financial decision that you take, kindly do consult your financial advisor and then take a decision. Before I talk about this company, a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also you can pay $100 upfront. You get 1 year access by paying for 10 months. And if you cannot pay on Patreon, you can become a member on YouTube by clicking on the join button, or you can become an yearly member on WhatsApp as well. If you can email me, you can become a member on WhatsApp as well. Now let me take you to the Screener website and let's discuss about this company. So the company in question that I want to discuss with you is Aegis Logistics. Now Aegis Logistics is in the space of transportation of LPG and other kind of, you can say, liquefied gases, etc., and oil tankers and so on and so forth from one place to another. Now this is a very interesting logistics company. This is not a your normal logistics firm which transfers or which delivers, uh, you can say, online deliveries or products, etc. This is into a specialized business, a business which has started to do well as oil prices have gone up. The demand is getting increased, and with all these LPG norms or CNG norms that have come in, and that gas distribution companies prices are different now, and distribution is getting enlarged here in India, and there is an accelerated growth in the development, construction and different activities here in India. This company is set to do well, it seems like, over the next 2 to 3 years. So this is a good investment bet at the moment as well as a trading bet in both cases. We'll talk about trading in a bit later on in this video when we'll discuss about the charts. But in terms of investments also, the company is trading at 30 times, 33 times earnings. 1 year forward, it is trading at 29 times. We have a situation where the company has a market cap of 14,000 crores, so neither a very small cap nor a large cap. It is a small cap, but a larger small cap, you can say. And so an interesting business per se. So if you look at it in detail, then we have a situation where the company has come out with very decent, you can say, numbers in the December quarter. So if you look at the numbers on a consolidated basis, in December they had sales of nearly 2100 crores, whereas in December of last year it was around 1200, 1220 crores. So this is a clear jump of 65% in terms of sales, growth of 65% in terms of operating profit also. From 150 crores it has gone up to 220 crores, so that's a clear jump of 40 45%, 40 42%. Margins have dipped. This is interesting, from 12% last year to 10%, but it has increased gradually from March 22. So if you look at it, in March 22 they had margins of around 7% and dipped to 4% in June. Then it increased to 8%, and now we are coming back into double digit with 10%. So I think the margins could continue to increase as they get more orders and there's more business that would come in. Eventually net profit was around 143 crores this time around, where it was around 110 crores in December of last year. So overall they had a profit growth of around 30%. They had a sales growth of around 65-70%, and that is just tremendous. And that is the reason why the stock, if you look at the chart, has consistently gone up from around 200 to 15 rupees. The stock is up to around 400 rupees. uh, it has doubled over the last you can say year or so. Since July of last year till now, the stock has doubled, has done exceedingly well as we see it. In terms of you can say the balance sheet, if you look at, the reserves have increased quite significantly from March 20, you can say from March 2016 at 470 crores versus 3300 crores till September. It would have gone up to around 3600 crores by now. So that's 5x jump in reserves as we are seeing. Yes, borrowings have also increased because of the expansion plans that they have put up, but overall things are looking upward for the company. uh, Debtor days has increased a bit from around 8-9 days to has shot up, but inventory days have remained constant at around 8-9 days or so. In terms of shareholding pattern, promoter hold 58%, which is pretty good. FIIs have consistently increased a stake here from around 14-15% earlier, 2 years back, to around 18% now. In an environment where FIIs have been consistent sellers, here they have increased stake. And if you look at it, DIIs have also increased stake to around 3.6%. It is the public shareholding that has reduced, and which is good that not much of public now stay in the company. From 25% it has gone down to 20%. So if I project the numbers all together, the March numbers are awaited. We expect that the March numbers would be even better and would be pretty good. Well, this is one of the best quarters that they would have. We expect a similar kind of EPS coming in, so I won't be surprised if the EPS ends up being around 12.5 rupees or so. Based on an EPS of 12.5 rupees at around 400, the stock is trading at around 32 times. But I believe that the growth momentum could continue. So another say 27% jump on this, and we are looking at something like 3.4 rupees more. So 12 and a half, just a second. So 12 and a half and around 30% will be 3.5 rupees. So around 16 rupees of EPS is what we are expecting. And based on that, if on 16 rupees of EPS next year, we are looking at a situation where the stock is trading at only 25 times, which is pretty fine. I think when the expansion takes place with the ROE of around 17%, I think the stock could easily trade at 30-32 times 1 year forward. So on that basis, I won't be surprised if we head towards a 500-520 in the next 6 months. And over the next 3 years, the stock could end up even doubling from these levels. That is my assessment on the company. If we look at further details on its business, then it is the leading logistics player with oil, gas, and chemical logistics company. It operates a network of bulk liquid handling, you can say terminals, liquefied petroleum gas, etc., that they transfer. Filling plants, pipelines, and LPG gas stations to deliver products and services to these places. This is pretty decent, and so liquid logistics is around 33% of their EBITDA, whereas LPG segment contributes to 67%. So this is very interesting because what it entails is that in liquid logistics there are very few companies that transport such kinds of products, and AGL is the leader in that space, and 33% of their business. And with the kind of push that the government is having with respect to gas distribution companies expanding into different regions, I think this is going to only increase in terms of revenue base for the company. LPG retailing is also somewhere where the company is at the moment is beginning to take shape. A strong clientele base. AGL has a diversified clientele base, and the list includes companies like Shell, Reliance, HPCL, BPCL, ONGC, HUL, Bombay Dine, and many more. The company also has pipeline connectivity with its major customers like HPCL, BPCL, and this has helped the company maintain a long-term relationship with the leading customers and having higher margins because they cut costs because of this long-term contracts that they have. So overall, in my opinion, the company is doing extremely well. They have had capacity expansion at the Kandla port with a static capacity of 45,000 metric ton and potential throughout a capacity of that's a huge, around 40 lakh metric ton or so, with an estimated project cost of 350 crores that they did in FY22. The expansion of 54,500 kiloliter of bulk liquid terminals at Haldia over and above the existing capacity of 120,000 kiloliter will is also commissioned during FY22. So this is what has happened in FY22. There has been a number of you can say capacity expansion, and that is why borrowings have slightly increased. There have been one or two acquisitions that the company has also done. So overall, I believe that the stock could double in the next 3 years. That's my assessment, and it could be having a market cap of 28,000 crores. It is trading at only 1.6 times sales, which is much pretty reasonable in this kind of business. So I think Aegis Logistics is something to be looked at current levels and on dips from a 3 year perspective with a target of 780 800. Now coming to the technical part in terms of the next 3 months as to what I expect that the company can do. So if you look at a 6 months chart of Aegis Logistics, we are seeing that it has consistently remained above the 50 DMA. Currently the stock is around 400. What one can do is probably buy here and buy on dips to 370 380 with a stop loss of 340 350, and they should look for a target of 500 over the next 6 months, 3 to 6 months. I see a target of 500 coming into Aegis Logistics. So this was a video on Aegis Logistics. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. And thanks a lot for watching.